Hello, welcome to my channel. I'm Stella. I specialize in accounting, tax, and investments. Today's topic is US tax season tips. So I'll give you some advice on how to avoid the future tax penalties. Let's dive in. Tax season's here, and if you're not careful, you could end up with penalties that eat into your hard-earned money. But don't worry, I've got you covered. Today, I'll walk you through some key tax tips to avoid the penalties, including how to make quarterly estimate payments the right way. The truth about tax extensions, they don't mean what you think. How to fill out your W-4 form correctly to avoid under-withholding, and a few other pro tips to keep you stress-free this tax season. If that sounds good, make sure to hit like and subscribe for more finance tips. Section 1. Make quarterly estimated payments. Quarterly estimated taxes. Avoid IRS penalties. If you are self-employed, a freelancer, or earning income outside a W-2 job, you are responsible for paying quarterly estimated taxes. The IRS expects you to pay at least 90% of your current year's taxes, or 100% of last year's taxes to avoid underpayment penalties. Payments are due 4 times a year: April 15th, June 15th, September 15th, and January 15th of the following year. Pro tip: if you underpay by too much, you could face penalties even if you're paying full by tax day. So don't wait. If you're not sure how much to pay, use IRS Form 1040-ES or an online tax calculator to estimate your payments. Section 2. Tax extensions is not payment extensions. A lot of people think that filing a tax extension means they have extra time to pay their taxes. Wrong. A tax extension only gives you more time to file, not more time to pay. If you owe taxes and don't pay by April 15th, the IRS will charge a failure to pay penalty, 0.5% per month on what you owe. Interest on top of that. So what should you do? If you can't pay in full, pay as much as possible by April 15th to reduce penalties. Consider an IRS payment plan to avoid bigger penalties. Don't fall for the extension trap. Plan ahead and pay on time. Section 3. How to fill out your W-4 to avoid under or over withholding. If you are a W-2 employee, the W-4 form tells your employer how much tax to withhold from your paycheck. Filling out wrong can mean too little withholding leads to you owe taxes and maybe penalties. Too much withholding means you get a refund, but that's your money the IRS withholding for free. How to get it right? Use the IRS tax withholding estimator online. It helps you adjust your W-4 accurately. If you consistently owe taxes, increase the withholding by selecting single instead of married, or adding an extra amount per paycheck. If you always get a big refund, consider reducing withholding to keep more cash in your pocket throughout the year. Smart tweaks to your W-4 can save you from tax surprises later. Pro tip: use the tax estimator at least once a year, especially if you get a raise, start a side gig, or experience major life changes like getting married or having a child. Section 4. Bonus tips to avoid tax penalties. Before we wrap up, here are a few more quick tips to stay penalty-free. Max out tax advantaged accounts. Contribute to a 401k, IRA, or HSA to lower taxable income. Track deductible expenses. If you are self-employed, Keep records of business expenses to reduce your tax bill. Double-check your return. Filing errors can lead to IRS notices and delays. Use tax software or hire a pro if needed. File and pay on time. Even if you can't pay in full, file a return to avoid a failure to file penalty, which is worse than the failure to pay penalty. Avoid tax penalties and keep more money. And that's it. Follow these tips and you avoid penalties, reduce stress, and keep more money in your pocket. If you found this video helpful, please hit the like button and subscribe for more finance tips. Thank you for watching. I'll see you in the next one.